Okay. Can you hear?
Yeah, sure.
Okay. So I have a questions. Is about everyone calls Singapore a springboard, but its high value market logistic is a polar opposite of the low price markets nearby. During your expansion, which core capabilities did you keep look at HQ as your modes, and which did you delegate entirely to local teams?
Okay. First, our co-management team has always remained in Singapore. From my experience, Singapore offers strong operational efficiency, management discipline, and execution capability compared to many surrounding markets. If you want to scale across multiple countries, having a stable and highly capable headquarters is critical. Second, financial control and capital management are centralized in Singapore in our company. Singapore has a highly developed financial system, strong regulatory standards, and a secure environment for managing
Mm.
company funds. So our financial accounts and cash consolidation remain at HQ. This is definitely part of our moat. On the other hand, we are very selective about what we localize or outsource. For example, influencer sourcing in Malaysia is handled by local MCN partners because they have stronger local creator networks and a better understanding of market dynamics. Instead of trying to build everything ourselves, we rely on partners who already have deep local resources. Logistic is another area where we choose specialization over localization. Rather than using local warehouses in Malaysia, we work closely with the logistic teams of our brand partners in China. China's logistic ecosystem is extremely efficient, service oriented and highly familiar with the products. Since we carry a very large number of SKUs, operation accuracy is critical. This model has allowed us to maintain an exceptionally high fulfillment standard. In fact, we have never had a shipping error so far. Advertising execution is also outsourced to specialized partners in China. China has one of the most advanced e-commerce ecosystems in the world. So we believe Chinese teams have deeper expertise in performance marketing and digital ads optimization. Overall, our strategy is quite clear. We localize the company entity, financial control, and the co-management team in Singapore while leveraging specialized external partners for execution. Local market insights and consumer preferences are fed back into the system to shape marketing strategy. And then strong logistic capabilities ensure efficient final delivery. In short, we keep the brain and capital centralized while building an ecosystem of specialized partners to execute locally. Yeah, that's my answer.
Okay, thank you.
Okay, so in your view, the Singapore is not just a market; it's a area of the system which we can use to extension, right?
Yes, yes, yes.
Okay.
Think I can have a question for you too.
Mm.
Okay, so let's see. You say like you manage 5 billion RMB in credit. And I think what about from a finance perspective? The biggest killer in the e-commerce is inventory, right? And then when you face a year of the stagnant stock in your inventory, so why do you choose to double down on marketing instead of slicing prices to liquidate? What was your underlying rates hedging logic?
Mm. First of all, I don't believe sunk cost should be the deciding factor in whether a business continues or not. In our first year in the industry, we went through a lot of trial and error before we gradually started to understand how the market worked. Under those circumstances, I believe the real solution was not to retreat, but to expand our sales channels and scale up the business. That was why we decided to increase our marketing investment. As you mentioned, if my decision had been to shut down the business, then aggressive discounting and inventory clearance would have made sense. But if the goal is to expand market share and build a business with stronger long-term margins, cutting price at that stage would have created a low-price brand image. And once that perception is formed, it is extremely difficult to reverse. If you look at premium brands like Trump and Waco, they are very disciplined about their pricing systems. If my goal is to build a brand rather than compete in the price war, then discounting heavily at a difficult moment was not the right choice, I think. Of course, the risk was real. Our hedging logic was not blinding spending, it was diversification. We continuously partnered with different local collaborators and leverage local networks and resources to promote the brand. That way, we reduce the dependency on any single channel or strategy, increasing our chances of long-term success. Yeah, that's my answer. Thank you.
Oh, thank you very much, Shi.
Okay, so you demonstrate how a finance first method allow a founder to stay calm during liquidity crunch and make counter intuitive investment that pay off in the long run, right?
Yes.
Yeah, that's a fantastic perspective. Most people see the inventory as a loss, but you treat it as a strategic option. It sounds like you were trading short-term liquidity for long-term brand equity.
Yes. Sure.
Okay, I have a question.
Mm.
Your transitional from finance IT to a front line live streamer. As a CEO, how do you decide when to dive into the trenches to put out fires, and when to step back to be the strategic brand? Also, how does your philosophy of Cincinnati translating into Townby bragging power doing ruthless cost negotiations.
Actually, I wouldn't describe myself as having truly transitioned into a frontline live streamer. I stepped in because at a certain stage, I feel I could explain our products more effectively on screen, similar to how Lei Jun personally introduces products for Xiaomi. But that does not mean my role is to become a professional live stream host. As the brand grows and gains stronger recognition, these responsibilities should eventually be delegated or outsourced. My principle is simple. If my personal involvement can significantly improve marketing effectiveness or business outcomes, I will step in without hesitation. But if the impact is marginal, I would rather spend my time on higher value work. For me, that means focusing on strategy, improving cross-functional coordination, managing department leaders, optimizing how capital is allocated, brainstorming with industry peers, exchanging experience, or have deeper, more strategic discussions with business partners. In terms of a negotiation, especially cost negotiation, sincerity does not mean being soft. First, you need to have real capability. The other party must clearly see the value you bring. Bargaining power comes from credibility and contribution. Second, preparation matters before any negotiation. Actually, we do our calculations carefully. How much value can the other party gain? How much can we gain? And what is a fair structure based on each side's contribution and risk? Negotiation should be rooted in logic, not emotion. When I talked about sincerity, I mean I do not throw out unrealistic numbers just to win a deal, nor do I expect to benefit from others without making real effort or contribution myself. One of my strongest negotiation principles is never assume you are smarter than the other person. If you underestimate people, you usually make poor decisions. Sustainable partners are built when both sides feel the deal is rational, fair, and worth continuing. Thank you.
Thank you.
Okay, so you highlighted that a CEO's role is to alternate between firefighter and architect, and also you provide that radical syncretely can significantly lower transaction cost and building iron called loyalty with your partner.
Yes.
Yeah, and I love your this idea, and I also think you are essentially saying that syncretely is ultimate laboratic for business friction. It's not just virtual; it's an efficiency tool, right?
Yes, you are absolutely right.
Okay. So last we have a few questions to ask.
Sure.
The one is that if you went back to day one with half the capital, which three actions would you cut and which single core engine would you keep at all cost?
It's a very interesting question. Uh, and also I think it's very important in the business actually. If I had to go back to day one with only half the capital, right? The first thing I would cut is unnecessary fixed costs. For example, investing too early in office space, which is unnecessary, oversized teams or infrastructure that looks impressive but does not directly generate revenue. Second, I would cut expansion without validation. In the beginning, we explored too many possibilities at once. Today, I would focus much more aggressively on finding product market fit in one market before replicating the model elsewhere. Third, I would reduce the trial and error spending that lacks measurable feedback. Early stage companies often spend money because they are anxious rather than because they are certain. I learned that speed matters, but discipline experimentation matters even more. But if there is a one engine I could protect at all costs, it would be marketing and the consumer acquisition capability. In e-commerce, especially for brands, traffic is oxygen. You can improve operations later, optimize supply chain later, even rebuild teams later. But if no one knows you exist, nothing else matters. The key is not spending more money, but learning how to acquire customers efficiently and repeatably. Once you crack that system, growth becomes much more predictable. Yes.
Okay, so you mean uh So your logic is the survival first resource is first one you when you come back you think, right? So and uh, and you believe that in the earning strategy of startup, the most valuable asset is not physical infrastructure, but the customer acquisition system, right?
Yes.
And okay, and by cutting fixed costs such as expensive office space and avoiding premature expansion, that a company can pivot its resource toward customer uh, acquisition as its core engine. And this whole thing will allow a business to maintain control over its growth trajectory even when its capital is cut by half, right?
Yes. Yes. You're right.
Okay. Okay. We have a last question.
Go ahead.
So in the next 3 years, which invisible variable AI, geopolitics, or customer downgrading is most likely to fundamentally disrupt your business model?
Among those three, I believe AI will have the deepest impact, but not necessarily in the way people imagine. Most people think AI is about replacing jobs. I think AI is about dramatically compressing the cost of decision making and execution. In e-commerce, this could fundamentally change how we do advertising, customer service, product selection, inventory forecasting, and even content production. So the companies that fail may not be the ones with the worst products. They may simply be slower at adopting. So the world actually is changing every day, right? At the same time, consumer downgrading is real, especially during uncertain economic periods. But I don't think people stop consuming. In Singapore, actually, they continue to they continue consuming. We feel that, yeah. They simply become more rational. Instead, consumers still want quality, but they expect stronger value for money. That actually creates opportunities for brands that can balance affordability with perceived premium quality. So if I had to bet on one invisible force that will reshape the business in the next 3 years, it would be AI, because it is not just changing tools, it is changing the speed and the economics of competition itself. Yeah, this is my answer.
Okay, yeah, I agree. You are highlighting that AI won't just help e-commerce, it will re-engineering the unique economics of how we compete, right? It's no longer a battle of who has more people, but who has a faster execution to feedback loop, right?
I think the ability for learning new things and adapting the new environment, changing environment. Yeah.
Okay, so anyone have the other more question want to ask?
I don't have.
I can have
No.
for yeah. So like you say, marketing is also a capital risk. So I think the key concern is whether the spend was tightly enrolled to avoid creating a larger loss than the stagnant venture itself. Is it true?
Yes.
All right, thank you.
Okay, so
Or do you have any advice for us if we want to try in the same field like business?
You mean the new graduating
Yeah.
like you, right? I think it's very difficult to start a business without any experience. So my advice actually is you can apply for work in the industry you are very interested in. Then you work for maybe 2 years, and you have some experience, no matter on marketing or supply chain or financing, yeah, then you can uh, think about what business you can do. Maybe you will have totally different ideas with now 就是totally different ideas when you graduate. So I think the work experience is very important. Yeah. And I think the reading more books, learning more technology and learning more AI, learning everything just happen new in the world, then combine with your work experience. It's very important. Yeah.
All right. Thank you so much for the advice. I think we're all gonna follow your advice and try our best.
You're welcome.
Okay, so throughout this conversation, one thing is clear: your success is not just based on e-commerce trade, but on financial discipline and strategy, agility, right? So you have shown us that a great CEO must be both a pragmatic, mathematician when handling capital, and bold, visionary when embarrassing technology like AI, like something like that. And you give so right now, and also you give us some advice to maybe we can do better when our you give me our some advice when we finish our study and go to find some job. Okay, so everyone have other question to ask.
I think I get the last question. Yeah. So can you give us like what is your motivation to do all the businesses?
Motivation. I have been working in finance industry for 10 years, and I just think I get in touch with a lot of new start companies. So I think it's quite interesting, and I have some resource, no matter the supplier and the financer, and I have this resource. I know about a lot of people in this industry. Then I think I can try myself, see if I have the ability to run a company myself, and what I learned in the past. I want to know it can or cannot support my business. So I just want to give a try for my new life in Singapore, I think, because I think it's quite difficult when you first transfer to Singapore to get a new job, or to go to a new different bank, or just like something like that. So I think it's the opportunity for me to start a new life, to try myself. Yeah.
I think it's like a big change from working in a bank in a finance to do your own business. So it's really huge, I think. But what you explain it is really explained well to us. So
Yes.
thank you very much for your advice and your motivation. Yeah.
Mm.
Yeah. Now we have. Could you ask the one more question?
Me?
Sure.
Oh, yeah.
Okay. So, no, doesn't matter. Uh, so, um, it sounds like your finance brain provide the tour, but your founders had provide the fuel, right? So that a powerful combination to for negation the variety of devs in a startup, right? I mean, just for the whole company, you are the company's brain, right?
Yeah.
Okay, I have a question. So, uh, in the financial industry, what do you think are the repetitive or weights of luck and abilities in a 5 years investment cycle?
Mm. Uh, oh, can you repeat the question? I didn't get it actually.
Okay. In the financial industry, and what do you think are the repetitive weights of luck and ability in a 5 year investment cycle?
Okay, wait a moment.
Okay. It's just like well, do you think is what is the most important in your in the financial industry? Maybe luck and ability. You think what is more important?
Okay. That is a profound question. In the 5 year investment cycle, the weighting of luck and ability isn't a fixed percentage. It's a functional relationship where ability serves as the multiplier and luck serves as the variable. If I had to quantify it, I would view it like this. One, the ratio 30% percentage of luck, 70 percentage of ability. One on a 5 year horizon, ability is what allows you to survive long enough encounter luck. Ability is the discipline to stay in the game. It's your risk management, your due diligence, and your operational rigor. In my banking days, we didn't count on luck to recover a 5 billion yuan loan. We counted on the ability to assess collateral and cash flow. Luck is the alpha, the unexpected market Taiwan, a sudden shift in consumer behavior like the post-pandemic digital surge or our competitors' unforeseen exit. Ability is the surface area for luck. I believe in the concept of increasing your surface area for luck. If you have high ability, you create more opportunities for good luck to hit you. For example, our ability to talk to thousands of consumers personally in Singapore seemed like a grind, but it created a luck of discovering a specific product market fit that our competitors missed. 3, the survival filter. In a 5-year cycle, ability is about avoiding the zero. Bad luck will happen, recessions, geopolitical shifts, or supply chain collapses. Ability is the financial buffer and the strategic flexibility you build so that one stroke of bad luck doesn't result in bankruptcy. Yeah. So luck might determine the magnitude of your success, whether you grow 5 or 10. But ability determines your existence. Luck gets you to a podium. Ability keeps you in the race. Yeah.
Okay, thank you.
Okay, so now we would like to say very thanks to Mrs. Xi coming today and to show a lot of things for us. And now we wish you and your company in the future will be better and be better. And thank you again.
Thank you. Wish you all the best too.
Okay, thank you.
Thank
Thank
you.
you.
Thank you.
Bye bye.